Hi, welcome to accounting. Today we're going to work on how to complete a worksheet. A worksheet is a tool that accountants used at the end of the month to work on their adjustments. The worksheet is a statement, so it starts with the company name, the who, the what, the name of the statement, a worksheet, and the when. Since the worksheet contains temporary accounts, it'll be for the month ended July 31st, so it'll be for a period of time. What you will start with is a trial balance. Sometimes you'll have to pop these numbers in. Sometimes they'll be given to you on the sheet. Generally, the trial balance is just a listing of all accounts and their amounts, and we total them at the bottom to make sure that our debits equal our credits. It's just a check to make sure that we're in balance. I have a very simplified listing of accounts and amounts since we're going to focus on just completing the worksheet. So the next set of columns is the adjustments column. We have a debit and a credit. And these debits and credits will either increase or decreases the balance from the trial balance depending on the debit and credit rules. So let's get started. We have three little additional information down here that'll help us to make our adjustments. The first one says supplies on hand at the end of the period, $500. So I'm going to scroll you down. I have at the bottom of the sheet, scroll down a little bit more so we can see it, a T account that relates to supplies. So I have supplies on hand, $2,000. I did take that from the trial balance here, supplies $2,000, and I put that in as my beginning balance of supplies. And then I created my T so that my ending balance is $500. The statement said supplies on hand at the end of the period is $500. So that would be the balance at the end. That's how much you would expect to be in that account. And during the month, what you do is you go to the supply cabinet, you use pencils, pens, paper, toner, all those good things, and they get used up, so the balance changes. So we have a question mark here. If I have a debit of $2,000 and I want to get to a debit of $500, I need to reduce this account because supplies is a normal debit balance. It's an asset. So what I need to do is I need to credit $1,500. And once I do that, 2,000 minus 1,500 gives me a $500 balance. So this 1,500 that you see here becomes the amount of my adjustment. So let's go back up to our worksheet. And we're going to look for supplies. I'm going to come over here in the adjustments column. My choice is to debit adjustments or credit supplies. So do I want supplies to go up or do I want supplies to go down? Well, I want supplies to go down. So I'm going to credit it $1,500 just like I did in the T account. And that'll give you a clue. If you credit it there in the T account, you will credit it up here in the adjustments column. I'm sure since we have been studying accounting together for several weeks that you're now saying to yourself, well, if we have a credit, don't we need a debit? And that's true because this is mirroring our journal entries. It's just kind of shorthand for our journal entries. So what we're going to do is we're going to come down here to supplies expense. I'm going to debit supplies expense for $1,500. So what we're saying is I've incurred an expense. I've used supplies during the month, so I've had an outflow of my assets of $1,500. I've had an expense. And this should make sense because expenses have a normal debit balance, and I'm debiting that account. All right, so the second one here says depreciation for the month, $750. Now, I'm not asking you to calculate depreciation. I'm just saying that depreciation for the month is $750. So now no calculation there. So we have to remember our journal entry or our entry for depreciation. So we are going to debit depreciation expense. So depreciation expense says this is what I'm going to record as expense for the month for depreciation. Remembering that depreciation is the rational allocation of cost over a capitalized asset's useful life. So we're going to say that we are going to allocate $750 of the cost of an asset that's lasting many years to this specific month, to July 31st. Our credit is to depreciate our accumulated depreciation equipment. me make sure that I have it up there in the right column. And we're going to credit accumulated depreciation equipment. Accumulated depreciation is a contra asset account. So we are familiar with the contra equity account drawing in that it has an opposite balance. Accumulated depreciation does the same thing, where it's going to have the opposite balance of equipment. And we want to make sure that we use this special account because of historical cost. Equipment we always want to keep at this $15,000 so that we can preserve the purchase price. And we're going to use the second account, accumulated depreciation, to keep track of how much depreciation that has happened over the asset's life. And you can see accumulated depreciation has a normal credit balance, and then it's already had $1,000 worth of accumulation of depreciation happen over the asset's useful life. Our third one here says rent was paid in advance at the beginning of the month for the next 5 months. So if we come up here to prepaid rent, it's an asset that represents cash that we pay in advance, and that we are going to say, okay, I paid for rent in advance, so I have a financial benefit coming to me. I have the right to stay in the place that I'm renting for 5 months, so that's a benefit. So I have this prepaid asset. But what happens is, as I'm using the storefront or the office building, as I'm working there and in the space, I'm actually using the rent. It's depreciating. I'm not going to have as much rent. So this says rent was paid in advance at the beginning of the month for the next 5 months. So what I'm going to say, okay, well, if I have $5,000 in rent and it represents the next 5 months, I'm going to divide it by 5. So my rent expense is going to be $1,000 a month for the next 5 months, at which point I'll probably have to make another large rent payment and start all over again. So if I look at prepaid rent is an asset. It has that $5,000 balance. Do I want rent to go up with a debit or down with a credit? Well, I want this prepaid rent to go down with a credit because, again, I'm working there, I'm using the space, and as time progresses, that rent that I've paid in advance is kind of being used up. And on the other side of that coin, I'm going to come down here and I'm going to debit rent expense for $1,000. And it's going to be an expense that I have used up some of my asset. I've used up my resources and I've rented, so I'm going to recognize the expense. The final thing you do is you total your debits and your credits in this column. So I'll use Excel to sum on both sides my debits and my credits. And I am in balance, $3,250. $3,250, and that's what you want to see when you complete your worksheet. It doesn't mean that you're completely correct. You can still make errors. Like if I switch my debits and credits, I would still be in balance. But it is a check to make sure that we are at least somewhat correct. Then we want to put the double line and the single line, which I will put here on both sides to indicate that we are complete with those columns, that we have done everything we need to do. Remember, the single line across indicates a function. In this instance, we're adding, and the double lines at the bottom indicate that we've completed the column. So that brings us to our third set of columns, the adjusted trial balance. Again, we have a debit and a credit for our adjusted trial balance. And what we're going to do now is we're going to say, okay, I had a trial balance, I made some adjustments, I need new numbers in my adjusted trial balance. If I look at the balance of cash, I had $10,000, but I don't have any adjustment for cash, and that's pretty common. There's not a lot of reasons to adjust your cash. You should know how much you have, and it should always match your bank statement. So we'll come to supplies. If I look at supplies, I have a $2,000 debit and a $1,500 credit. Since supplies has a normal debit balance, this is a reduction in supplies. So I'm going to come over here and I'm going to make my new balance of supplies $500. And this should make sense. You should remember having seen this $500 before. And I'm just going to take you back to the T account at the bottom of the page very quickly. It says supplies on hand at the end of the period is $500. The balance in our T account is $500. And our new balance up here in the worksheet is $500. So hopefully all of yours work out that well. We have prepaid rent. We had a $5,000 debit and a $1,000 credit. So that's a subtraction. We're going to now have $4,000 for prepaid rent. We have equipment. We didn't make any adjustment to equipment, and that's common. You shouldn't really be making adjustments to historical costs for fixed assets. And then we come to accumulated depreciation. It's in the credit column. It has a normal credit balance. I come to the adjustments, and I have another credit. That's an addition because a credit and a credit should increase for a credit account. So $1,750. Next, I have accounts payable. We didn't make any changes to accounts payable. And capital, we didn't make any changes there. I had Smith Drawing. I didn't make any changes, but I'm going to remind you that drawing is a contra equity account and has a normal debit balance. So that's where you switch back over to your debits. And then I had 0 for supplies expense, plus a 1,500 debit is going to be a 1,500 debit. With rent expense, the same thing. I had a 0 plus 1,000 is going to give me 1,000, and 0 plus 750 is going to give me 750. And it's not that unusual that these 3 accounts would have zeros because they're temporary accounts. We zero them every month, and these 3 especially are generally due to adjustments, so they might start out with zeros until the end of the month when you go and look at some of these assets and make adjustments. So again, we'll total the columns to make sure that our debits and credits are equal. And I've done that. You may notice that our column here, the adjusted trial balance, is different than our trial balance here. But not necessarily by a differing amount of the adjustments, because some of them are added and some of them are subtracted. So don't look for that phenomenon. And then I'm going to go ahead and put our single and double lines to indicate that we're adding and that we're completing those columns. So what we have here is a column called the income statement and a column called the balance sheet. And what we'll do on the worksheet is we'll kind of do a mini financial statement. It'll be similar to a financial statement. It's not as formal, certainly. It doesn't have all the formatting, but it'll kind of give us a clue as to what we're going to be looking for when we do complete the financial statements before we do our closing entries. So what we need to do is determine which of these accounts go on the income statement and which of these accounts belong to the balance sheet. So if I look over here, cash is an asset, supplies is an asset, prepaid rent is an asset, equipment is an asset, accumulated depreciation is a contra asset, so it stays with the assets. Then we have a liability and an equity account, 2 equity accounts. So those are all my balance sheet accounts. So I'm going to take all of these balances and put them on the balance sheet. Remember, our assets equal liabilities plus owner's equity. So I will come over here to the balance sheet, and I'm going to put the $10,000 for cash, supplies, prepaid rent, equipment, accumulated equipment. Oh, I can't quite see on the screen. I'll pull you over. Accumulated depreciation, accounts payable, and capital, and oops, not capital, 26,500, capital and drawing. Now these expenses all belong on the income statement. We have revenue and expense. I don't have any revenue here, so we will just bring these all over to the income statement. We have 1,500 for supplies, 1,000 for rent expense, and 750 for depreciation expense. Now what we'll do is we'll sum these columns as we did in the other ones. So let me sum them all up. Oops. No, the Excel is acting funny. I'll just put a 0 there so it doesn't get confused. Sum that column down and sum this column down. Well, you've probably already said, Mrs. Cesario, I'm looking at these And you're